Thank you. Good afternoon, everyone. It is a pleasure to moderate the session on decade of intake innovation, e-learnings, and the lessons, and what is in the next frontier. Um, Obviously, I'm saying India has seen remarkable transformation in financial services over the last decade. I think it has been repeated multiple times. It was driven by the government push on Jan Dhan account, the whole bold payment transformation initiatives, and obviously the availability of DPI, Aadhaar, and all which has been there. However, if you really see now, um, you know, um, actually fintechs have played a great role in the whole transformation, right? In terms of whether it is democratization of the whole financial services or reimagining the whole financial services delivery to the masses, if you really see. Now that when we are at the crossroad of what we have been calling it from a digital banking to intelligent banking, or from inclusion to innovation, I think is the right time to reflect on what has been the key learnings and what lies ahead of us primarily, right? That's the key aspect of it. I think that session is primarily focusing on that part of it. Obviously, as we innovate future, the whole importance of trust and security remains important. How do you balance between innovation and regulations, right? The whole while we innovate, obviously the whole we should not take our eyes away from the inclusion aspect of it, the sustainability. So the growth should come from inclusion and sustainability part of it. And as we see that the next 1 decade or more is going to be critical from this angle. Obviously, fintechs will be the key drivers of whether it is the consumer, the whole institutional part of it, or you are looking at the innovative products and services which are coming up. So let me start the discussion by posing a very simple question, okay, where the panelists can reflect. The question is really, what has been the real learning from the last decade, right? And if all of you can just talk about two blind spots and the two breakthroughs, starting with Lizzie, and we go in this order, that would be really great.
Sure. So I think this is all about looking back over the last decade, which means we're some of the oldest people at this event, clearly, if we've operated over the last decade. Everyone looks so young outside. But let's go back a decade. I remember when I first tried to build digital lending products 12 years ago, and this was pre-India Stack, pre-UPI, pre-Geo, which is a big deal. We forget about that. Mobile data was really expensive. So the idea of saying everything would be done through an app was kind of crazy. And I remember going and meeting many payments companies, regulators, bankers, and saying, we're going to issue a loan instantly on the fly on an app. And the two big things they said was, no way, it will never happen because of KYC. KYC in this country will always be paper-based, in person, etc. And secondly, it will never happen because you will never be able to move money instantly. And so, two big breakthroughs, we've achieved both of those spectacularly. And as someone who is obviously not born and bred in Mumbai, I can say the world is in awe of how well we've solved those two, KYC and instant faster payments, and the rest of the world is a decade behind that. The two blind spots I'm going to pick, number one is very unusual. I don't think anyone else will say this. I think we have failed to innovate as much on the capital market side, and we'll talk about that more today. What do I mean by that? But our capital markets are still in the dark ages, and that's, I believe, why we still have insufficient credit supply where we need it, specifically SME. And then number two, I would say we have not done enough on financial literacy. I now work in the world of financial distress, customers who are in arrears, and it is astounding to me how little they understand about the products that they are in. And I think it's our job as a community to do a much better job of education.
So I think for me, if I look back, I see the last decade as FinTech in India has been a nation building project. We've been able to figure out how to connect, verify, make behavior change happen for a billion plus people. And I think so, as a result of that, the behavior has become intuitive. The other phenomenal thing that has happened is that the trust that we used to place heavily a decade or more ago. My father was a banker, and we used to look at public sector banks. That's where we'll borrow from. That's where we'll put the money. The trust has moved from institutions to experience, where you say now, okay, I trust this particular entity because I get speed, I get transparency, I have surety of how work is being done, and there is a very, very clear metric of trust, which is visibility, right, in tech. So I think people have become comfortable using mobile money, using unknown entities to borrow from. So I think that's been a huge behavior change aspect that we have seen. And I think overall collaboration, which we all talk about between banks, fintechs, that's a very rare ecosystem globally that exists only in India. And also I think it has happened with regulator, where we do sometimes face a challenge that it curbs growth. I feel the last decade, and especially the last 5 years, have shown us that you can actually achieve speed while also ensuring customer safety. And that's where huge work done from the regulator side to build that ecosystem. To me, from the vantage point where I see, because we are into MSME credit, I think a big blind spot has been the tier two, tier three SME market. And the moment we say, this is a huge untapped market, 80% of the overall consumption economy. I will go as far to say that this is not the market. This is the India that we are talking about. I think that's been completely missed out. Has still been invisible. The missing middle segment of SMEs. Second, focus that we've always done is hugely on disruption, innovation, how we can do alternative data-based underwriting, velocity. But I think the focus on quality, depth, really solving for one problem deeply is something where I think this decade will really overpay for and overcompensate for if we start to choose taking one problem and deeply solving it, rather than thinking about velocity and speed, but actually going deep and over sort of focusing on quality and obsessing less on just scale for the sake of it. So I think these two things are the blind spots for the last year, which are looking promising as far as we see in the next decade. So yeah, these will be two things from my side.
Yeah, so see, we come from the digital assets space, right? And if you look at what's happened in this past decade, the biggest focus has primarily been on just two major subjects. One is regulations. And regulations, very interestingly, we've gone from, if I look at it from the regulator's point of view, we've gone from unknown into known unknowns. So today, I remember when I first had a conversation with all the stakeholders who were trying to develop policies around this, the kind of questions that would come were extremely horrific because they were uninformed and because it is a very complex technology. But I think the industry collectively has played a very important role in educating a lot of the stakeholders, and they themselves have, of course, up the game. And the kind of questions that we hear today are far better and far more nuanced, and they're actually the tough questions to solve, right? That these are the questions that all of us collectively, industry, regulators, we all have to collectively solve for. So that is, I think, in my understanding, what's happened in the past decade as far as digital assets are concerned. um, Also, one more thing, I think, if I could call it a blind spot, is that there has been a massive focus from an India perspective on exchanges, crypto exchanges, on speculation, on trading, leverage, those kind of activities. While if you look at this globally, um, a lot of different allied industries have developed around digital assets. So custodians, for example, in other jurisdictions, regulators are licensing custodians and they're mandating that exchanges now hold, say, 70% to 90% of user assets with third-party custodians. We've not heard this conversation in the India context so far. The focus has centrally primarily only been around crypto exchanges, which is the speculatory activity. So I think these two blind spots that we've seen in the past decade. What I see moving forward is lot of interesting conversations. The previous panelist was talking about tokenization. So that's a very big theme. We are hearing the Maharashtra government's ambitions of wanting to tokenize $1 trillion worth of real estate from Maharashtra, and put it onto the blockchain, make it a digital asset. So I think these are very interesting conversations. We are hearing a lot of things around stable coins. They are now completely changing the way we do cross-border payments, the way we look at remittances. That's another very interesting area. So I would think the next decade is for us to go into the known unknowns and now to work together and solve for those.
So I think uh, the answers were mainly from a banking point of view. I will talk from a consumer point of view, right? As a consumer, how has my life become easier in the last 10 years? So I don't remember the last time I used a debit card to withdraw cash from an ATM. I think India has done a phenomenal work in terms of removing friction in payments. Today, payments are effortless. I don't carry any of my wallet. In fact, on credit card, if I have to make a payment via credit card rather than UPI, uh, today there is a feature where I can turn on NFC and tap my phone. So it's as frictionless as it can be. And I have friends in the US, I have friends in different countries, and everybody gets astonished by the impact it has created. In smaller towns, villages, the impact of UPI has been phenomenal everywhere across the country. So this is where India has done a far better job compared to any other country. And second part, I think, as Lizzie mentioned, uh, the impact created by Geo. So the end result is that someone sitting in a small town village today can apply for a demat account and get it opened quickly, or apply for a loan fully online, digital, paperless. So the adoption of net banking, mobile banking, the stock broking apps, everything that has really helped bring more people in the financial services ecosystem of the country and expanded the market pools. So these are the two things where I feel we as a country have done far better job compared to other countries. In terms of where we have lagged, it's a byproduct of both these things. The consumer frauds have been at an all-time high. Uh, I'm sure all of you would have read the stories of digital arrest, UPI fraud, somebody sending you a screenshot of something and saying ki you owe them money and then putting UPI pin to receive the payment. All these frauds, some friends, some family members, some senior citizen, we all know such stories, right? I know a relative of mine, very educated, works at a company, chartered accountant, ended up paying 1.5 lakh rupees, 50,000 rupees, 3 transactions. So just imagine someone as educated as him, based out of Bangalore, which is supposed to be Silicon Valley of India, and a person like him falling prey to such a fraud, right? I know many educated people, not talking about people who are not very tech savvy, very educated, highly educated people getting a victim of such frauds, right? So this is one area I think something can be done better. But recently we all heard Sanchar Sathi app. It was more of a controversy. I think government was trying to do some good initiative by implementing that mobile app, but unfortunately, or I don't know, nobody has enough information about what was the intention, but that went into some controversy. So hopefully there is a step going on in that direction. At least it has come under the radar of the government, the regulator, that fraud is a big problem and that needs to be solved, and it should happen in the near future.
So I think my panelists have already spoken about the last decade, how it has been a monumental change which has happened. So I think all of us have also witnessed it. So I will not harp on it, but I was always a career banker, almost like 16 years in core banking and then getting into a fintech. So banking was around that banks are there, they used to make money, and obviously the objective, the metrics of looking the development was different. What has changed, and that my perspective towards those blind spots, or I would, instead of blind spots, I'll call it things we could have done better, or we could have done more impactful, could have been one around financial inclusion per se. So while credit is one element, but if I look at expanding it, it could be around insurance. While we can talk about the bank accounts, we spoke about Jan Dhan and things around that, but how many accounts are active? How many customers are actually having those detailed interactions across all the life cycles? Okay, I think that is critical. We have to look at how can that high end of technology be brought to the bottom of pyramid. Because if still we talk about after a decade of so much of progress, we have actually there are two sets of people, digital natives and not digital natives. And there are still more than 500 million people in the country who are right now not in the digital fold per se. So that is where I think the focus has to be in the next decade, and that is something we could have done better. Second, since the banking thing always come into my mind, we also look at how many products you are able to sell to a single customer, and we also always used to think about the customer ownership piece. Because if the customer opens a bank account, the customer I own, and obviously one of the key metric to track that how many products get sold and cross-sold and the other pieces around it. I think the way in the last decade we have seen, it is now more of customer ownership. It has moved to customer interaction, because the same customer in the ecosystem is interacting at hundreds of such touch points across digital modes, that to define and say that I own the customer, that definition has changed. And that is where that visibility or that knowledge around that customer needs to come in more. While a lot of developments or a lot of things are happening, account aggregators and all, but I think a long way needs to go to have far more visibility of the customer. That I think would be key defining for the next decade forward.
Thank you, Rajat. So as I see, I think to build the infrastructure has been great. Obviously, I'm saying, whether it is the mainstream banking, whether it is you look at the, inclusion of the whole financial services to the tier 2, tier 3 places. Some of the experiences from the consumer side has been phenomenal, as we heard from. Obviously, the key will be how do we now use this, as we call it. I call it the whole India as a market, right, is available. And Lizzie, maybe I request now each panelist to double click on one or the other areas. So with your experience in digital lending has been one of the key focus, right, from a fintech perspective and also from a financial revolution perspective. How do you see the next decade in terms of, the digital lending? What are there new credit models going to come up? Are there new technologies going to come up? More sustainability is going to be the question mark. Which is the area you think is going to be the focus?
So yeah, I only really know about digital consumer lending. Almost every other topic is a mystery to me. But I think that is one of the more interesting ones, because I don't know if everyone in the room knows this, but in the last 10 years in India, we have seen a 10x growth in consumer loans outstanding. That's probably the fastest growth in consumer lending that's ever happened anywhere in the world in history. And that's completely changed the way people behave, the way people think about money, wealth, the future. It's a really huge economic predictor. And I think we've talked about it, but one of the keenest observations I have, and what I've devoted the next stage of my life to, is we've done such a good job at making the creation and dispersal and acquisition of credit easy. It is literally touch of a button. It's alarmingly easy. We've almost made it too straightforward. But we've sort of given a false sense of security to the customer and the industry that the rest of the product stack matches that first touch point. And it doesn't. Today, it does not. If you look under the hood of what's really happening inside most financial institutions, we are relying on core banking systems, loan management systems, and an entire infrastructure that has not been updated in the last 20, 30 years. And that leads to a horrific experience, talk about customer experience, on the back end. Try closing a loan today ahead of time in India. It's a nightmare. Try fixing your credit bureau report. Has anyone ever tried to do that? Like, good luck. It will take 6 months and it's traumatic. The way that we basically store and keep and understand customers in financial institutions is completely broken. And the result of that is not just a bad customer experience, but what I'm now seeing, which is actually systemic risk in the industry. We're seeing a lot of leakage in risk, actual credit risk, simply because of poor systems. So I just give an anecdote, but we now work in the world of loan servicing, and we've seen customers that have 8 co-branded credit cards outstanding, and they were not aware. they actually had no idea that there were 8 co-brand credit cards in their name. And that's a reality of the situation today. So I really hope we all do our job of cleaning up the back end and the infrastructure as well as we've done the front end.
Thank you, Lizzie. Now, if I move on to Pallavi, with your experience in MSME, see, with the vision which our government has about Viksit Bharat 2047, and also the whole concept of large banks and all, recently we were in a panel, and one thing we heard that if the MSME sector doesn't kick in, all of these visions cannot be really achieved. So, from your perspective, how fintechs and the next 10 decade can really contribute into this, if you can share some thoughts?
Yeah, no, absolutely. And we've been talking about MSMEs being the second engine of economy. You know, there's a speech that Nandan Nilekani gave recently, which talked about India, if we want to achieve it being a $8 trillion economy, then MSMEs have to play an important role. So we know the numbers, we know the GDP contribution, the job market contribution. I think the question for us is really then why, with all of these data also being available, why is MSME credit penetration so low? And I think that's where when we speak about solving that one problem deeply, we need to really go deep and understand the reality of these borrowers, right? And given the amount of work, you know, it's been 9 years of building Progcap, and you know, almost going to be a decade for me as well, to see as we go in these small towns, markets, you know, even you know, you look at a road in where I live, just going half a kilometer from there on the market, you will see a bicycle shop, a tire shop, you know, utensil shop. These are all MSME customers sitting right there. They will have a footfall. You will find some logos on the shop of brands. You will have some salesperson, maybe a computer as well. But credit penetration is not there. Mostly, it's not a question so much of demand. It's not even a question of supply. It's the way this market works. And even today, this whole ecosystem of MSMEs works on informal credit. So for us, the biggest surprising factor has been that why these customers are not willing to get into a formal credit ecosystem. A, because they do get informal credit from their suppliers, from the ecosystem in some ways, which is where we need to look at it as an institution to see how we can institutionalize it credit, so that focus shifts on growth and not so much on credit conversations and recoveries. But the other side of it is also when it comes to how the ecosystem is behaving. Today, MSME credit is everybody's problem and everybody's focus, and meaning which that it's actually nobody's baby, right? So we look at MSME credit the same way we look at consumer credit. We don't have any differentiated risk weight norms. We don't have differentiated, you know, cost of funds. We talk about, and you know, if you look at the cycles with which these customers work with, there's a huge amount of volatility. So they will have an unpredictable seasonal credit cycle. So let's say a shopkeeper keeping Coca-Cola or beverages, summer season, the rains come in, the product doesn't sell, and suddenly he's out of business. So very, very fragile. And but the products that we have are mostly EMI driven, so which expect a monthly rigid repayment schedule that cannot fit into their cash flow cycles, and therefore repayments become tricky. So we need two things really beyond understanding this segment and their realities, to go deep and figure out how we can also build for the right products which can match with their cash flow cycles, how we can build capacity for them to pay, so huge amount of literacy element that comes in. And finally, I think the ecosystem that we need to work on, as you know, we've been talking about why MSMEs growth and access to credit is important for that growth and for our GDP, but then are we doing sufficient work to create that kind of a cushion for even players who are providing MSME credit? Can we think about a different kinds of license? There is a license, different license for housing finance, for microfinance, but MSME finance does not have that cushion, right? So one bad event happening for a borrower leads to a bad event for the players who are providing that credit, and therefore it gives a bad rep to the ecosystem. So say that MSME credit is not good, the behavior, the NPA cycles are increasing. I think we just have to really focus on solving from, you know, working backwards to see how we get to that deep understanding, create the right products, and create an enabling ecosystem to build those kind of buffers and cushions so that any any changes in the seasonality, cyclicity of their cash flows, then we are able to cover that up. So I think that's the work and job to be done for the next decade as an ecosystem for all of us.
Thank you very much. I think now if we move a bit from the credit discussions we had into aspects like tokenization, which you were talking about, Manhar. Really, I think again this has been discussed a lot. There are papers which have been published, but what do you think is the real mindset shift which is required? Because still, when you comes to tokenization, again, I'm saying literacy about knowledge about such products, availability of such products into the market. Are there regulations available? Is there a government push? Some of those aspects come into play. So how do you see that, and what role maybe the fintechs can play going forward in this area?
So I think it was very interesting what you mentioned, Lizzie. When you look under the hood and you see the back end and you see all of those, they're all broken, right? So what this digital asset technology has really done is it has actually brought a public ledger which anyone can plug into, and they can actually build applications on top of that public ledger. You can deploy applications there. Now, what this has done is this has basically made payments programmatic, and at the same time this has taken data and a lot of information out of your private silo into a public kind of a open source infrastructure platform. Now when you bring in something like this, automatically this forms the foundational basis for something like credit, or we were discussing that what's happening with credit scores is currently in silos of several different credit score bureaus, credit bureaus, etc. Right, and they have their own sets of information. We faced this with banks as well previously, and therefore this whole account aggregator is coming in to try and ensure that there is availability of data, etc. So a lot of interesting, fundamentally different technologies are emerging in the digital asset space, and one of their use cases happens to be tokenization. With the foundational principle that you have a lot of real world assets which are currently illiquid, and they're you cannot break them down into smaller chunks. There is no efficiency, there's no way to transfer them here and there and to bring in some efficiencies. But now we have this technology, this public ledger infrastructure, and this public rail. If I have to give you one fundamental challenge, or that the sort of thing that really needs to flip, it is our current reluctance to look at this public ledger, or this public infrastructure, and embrace it. Okay, we still as a nation are sort of in that mindset of what we call as permissioned systems. Okay, and permission systems are great. They also use blockchain technologies. They also leverage, you can have trustless systems within multiple entities, known and unknown entities, and they can participate in creating a network. You can use that network to do a lot of transactions, but fundamentally you will always end up making a larger silo. Instead of one entity having silos, you'll probably have a multi-entity silo. I think that is the reluctance. If we can flip that switch and be open to a permissionless system, and then try to embrace that for building all sorts of infrastructure rails that we're trying to build for fintech, for healthcare, for real world assets, for gold, for for a lot of these things, I think that is the one thing that I would say.
Thank you. So, Aman, I'll come to you the last, but before that, Mr. Rajat, I'm saying continuing on the discussion, obviously, how do you see the overall financial well-being, right? And still the discussion is more about payments, more about digital lending, credits and all of that. But ultimately, it's all about the overall financial well-being of an individual or a customer or an institution, right? So,
Absolutely. I think largely the life cycle is majorly on those four pillars of payments, lending, insurance, and savings. And somewhere all these four pillars are interconnected. So while we spoke of credit per se, but in case if the moment we start looking at the next 500 million, we know for a matter of fact a small bad event can raise off their ability to pay off credits. So that is where the insurance fades in. if they are earning and they're not able to save or make money on that, then the ability to create scores and to create lendings also gets challenged. If the payments are not smooth, then the collections part of the credit somewhat get impacted. So I think the overall ecosystem is well interconnected. The all the ingredients are in place. It's just about putting it all together to see that we are able to create the biggest currency, which is trust. The same currency of trust, which could be around regulations, which could be around experiences, which could be around the interactions, which could be around the policies, which could be around the transparency. Everything has to be blended, and to see all those elements are being the rightly educated, communicated in a fair, transparent manner. So that is where you see a better participation using technology, using AI, maybe blockchains, maybe the entire digitization of credit, and MSM is becoming stronger. So all the elements have to rise and build, okay, and that is where we'll see a larger transformation happening from the real objective of the fintech, what actually is supposed to do.
Thank you, Rajat. Now, you rightly said, obviously, any panel today without discussion about AI is incomplete, right? So I thought I have left the last question for Aman. How do you see? I'm saying the real use of AI, right? I'm saying either today or going forward, based on your experience today.
So I think time is up, so I'll keep it short. I this is my second venture, GreyLabs AI, and I started in 2017. From then versus now, lots of changes have happened. The pivotal moment was, 2022 November when ChatGPT was launched. That's when people felt what AI truly was. Right? Before that, the adoption was slow. People experimented with small use cases, but really there was no large scale impact. I think now what is happening is AI is at a level where the technology is really here to take away some of the jobs. It's sad, it's unfortunate, but that is what is happening globally, and it will happen in India as well. So, what is really happening, if the technology is able to do the work of a human being, then the budgets of salaries are now opening up towards the software side. The payroll budgets are now getting added to the IT budgets. So the IT budgets are rapidly expanding. People are saying, here is my call center. I have 500 people in this call center. You remove 300 people, you build a software which can remove 300 people. I will pay you salary of 150 people for your software usage. So ultimately, this is how the technology expansion is happening, right? The mind shift that has happened. This was not possible maybe 5 years back, which is very well possible now. So now there are many use cases coming up because of this. Call center automation, which is where we are, right? How to build AI which can completely talk like human beings and eliminate contact centers across telesales, collections, customer support. I have heard of startups into OCR. So one of our banking clients, I was visiting their office. There are about 200 people sitting there. So when you fill the application form in the branch for a credit card or a loan or account opening procedure, a scanned copy of that document is sent in the backend. I could see some scanned copies opened and people were doing data entry. Now, needless to say, such kind of jobs will be very soon automated by AI, and those pools will be available for software spending. Other than that, there are use cases around compliance, better underwriting. So I know some of the banks, some of the fintechs, they are using voice AI data for underwriting a customer. So on a call, is the customer fumbling? Are they talking in a certain manner which seems like a red flag, right? Video KYC is a very good example. Can AI flag certain inconsistencies in the video KYC process? So all the things wherever a human has to use a judgment, and it is happening at large scale in the company, technology is being implemented, AI is being implemented to automate that role and free up those pools. So, these are some surface level use cases. Honestly, I'm sure many of us have heard of, but there's a long tail of use cases which will emerge in the next 3 to 5 years as AI, as technology becomes more mature across marketing function, across, contact centers, across operations, underwriting, fraud, risk monitoring, bunch of things.
Thank you. Thank you very much. Thank you, panelists, for your great inputs. I'm sure as we see, we have a strong foundation to leapfrog in the next decade. There are, I'm seeing, right set of challenges in front of us also to really find solutions and, work together. Thank you very much.
Thank you so much, Mr. Sanjay Gupta, for moderating.